Hey, welcome to the Financial Security Planning Channel. I'm Eric Powers, a certified financial planner, and today I wanted to take an opportunity to talk to you briefly about a few matters that may be important. We're going to start and stop with 2020, the year. Some of the most frequent words that were used in 2020, like dumpster fire or nightmare, exhausting or chaotic, those were all used for a reason. They described how we felt about the year. We really want to be able to replace those words, right? Replace the 2020 with 2021 words, which are brighter and happier and hopefully show that we're moving forward. So, for certain, we'll be making our way through the aftermath of COVID-19 for many years to come as the population begins to get its vaccination. But at least in the near term, we can say that we're looking forward to better times in the economy and in the market. Getting over the hump and returning to some sense of normalcy will probably occur over the summer, and we'll be using sunnier language to describe where we're headed, like powering forward or reopening or connections or relief. These words connect to a few points that I want to talk about in commenting on January and my perspective of what to look for in terms of the economic updates, investment considerations, and touching lightly on policy. Little things matter. No, that's not what she said. But in regards to the White House, historically, which party occupied the White House or controlled Congress hasn't had a meaningful impact on the broad stock market performance. Policy matters, but larger economic forces are more influential, and businesses are very good at adapting to different political environments. Having an environment where it's easier to start or run a business can make a big difference in people's lives, but the policy impact on markets tends to be more focused. Markets historically have seemed to prefer divided government, whether it's because it removes the extremes or it encourages spirit and compromise. Solid economic growth. Even though some economic data, particularly the jobs report and retail sales in December, has suggested that a pause in the economic recovery occurred in late 2020, the U.S. economy likely grew in the quarter. Bloomberg consensus of gross domestic product, GDP, growth for the fourth quarter was 4.2% annualized. Even though economic surprise indexes weakened some during that quarter, they remained in positive territory. At some point in the future, January 2021 will be remembered for two historic events, right? The first is the storming of the Capitol. I think those who were involved are rethinking their objective and how they could have done things differently. The second is the GameStop short squeeze, which basically got together a whole bunch of individual retail investors who made a bet that GameStop was worth way more than it's said to be. So it's something we're going to remember for sure. We're going to remember GameStop because it's going to be retail investors versus the Goliath Wall Street or hedge fund managers. I'm using the word trader intentionally because that's exactly what they're doing. There's a lot of trading, high frequency trading, that has to occur for this to have happened the way that it did. But now let's think about it really quickly. GameStop as a company may have been undervalued at some point, but the true value is now significantly overinflated, and it may be a few individual Robin Hooders that benefit from the trade, but in the long run, a lot of people will probably get hurt as it returns back to earth. So when we talk about real investment considerations, we'll refer to the investing fundamentals and technicals that are far less speculative. Despite the potential of improving backdrop of strong earnings, investors will still need to pay attention to the high valuations that are out there and consider appropriate weightings and underweightings and overweightings for the recovering global economy. So what does that mean? Areas that probably still have room to grow include small cap, which historically do well coming out of a recession, which we are, or we have come out of the recession. Tech and stay-at-home plays, those have been doing very well. And they'll likely continue to benefit as their earning reports come out this week. And likely cyclical value positions But these are going to come out probably a little bit later as we get more towards the reopening in coming months. Cyclicals including like banks. In terms of fiscal policy, meaning tax and spend, there's no doubt that the tax increases could be impactful on the market. With Democrats having a razor-thin majority in either house of Congress, it's unlikely that all proposed tax increases are going to happen. One of the bigger concerns has been around the corporate taxes. If domestic profits are taxed too heavily, large companies may look to send their profits offshore at lower rates. That's how that works. So the thinking is that it can sustain some increase, but will likely probably come in at about half of the proposed increased rate. The good news on taxes is that it's probably not going to come right away. It takes time to do tax reform. The recent spend part of the equation moves through Congress very slowly. And in fact, the most recent stimulus that's being discussed was originally thought that it'd be out by now. It's now early February. And it's being debated as far as what's going to be in that relief package. The three basic areas that were in the package as it began in January were $415 billion for vaccine rollout, $1 trillion for direct relief to households, and then another $440 billion for small businesses and communities particularly hard hit. The basic thinking behind this relief package is to buy us time, to buy the economy time in order to recover, which will probably be followed by phase 2, and phase 2 is really probably going to include infrastructure. We'll see that spending first, and then we'll see the taxes later. Tax bill will be significant, and that's going to be something we talk about for a very long time. It's very hard for me to pack all of my thoughts into a short segment like this, but I do hope that it's been useful for you, and I hope that you've enjoyed it. That's all for now, and I hope you're enjoying the content. See you next time.